is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for Tuesday, October 18th, 2022. Going into the journal, we're going to talk a little bit today about some of the economic factors that are going on. We'll talk a little bit about earnings. Then we're going to jump into the charts and sort of look at to see how those are affecting everything. And finally, we'll go through and we'll look at the trade that I have on. You can see it here behind me right now. If you are watching, it is sitting right there. Got myself one of them straddle positions yet again. And I'll talk about last night's straddle, how it worked out, and what I did, what I wished I'd have done differently, and what how I'm going to try and change things on this one so it goes a little bit better, okay? Coming into today, the two big things, we have some earnings coming in. In the evening tonight, we've got Netflix is reporting their earnings after the bell. I've talked about that on a couple of episodes before. Again, it's kind of going to be one of those things is like the direction that Netflix goes is going to also be kind of the direction that the rest of tech tends to go. It's not the leader, it's more of kind of a canary in the coal mine. One of the things that we had coming out for Apple today was Apple is already dialing back the production of their iPhone 14. It has not been widely, people are not liking it. The cost of it versus what you get, it's really not a revolutionary new phone as far as what I've seen in some of the consumer reports and stuff like that. I don't know. I'm not an Apple guy. I don't care that much about them as a company. I don't think they're really changing the game for anybody. I think they're doing the same thing as everybody else. And I like my Samsung just fine. So we did get earnings this morning from Lockheed Martin and J&J. I believe Lockheed was a miss. Don't quote me on that, though. But it was a slight miss. Oh, no, maybe I think it was a beat. They beat by like 1 penny. And then J&J was also, they were a miss. But as far as what's coming from these guys, as far as what their earnings are, doesn't really matter so much as their guidance. And right now what we're not seeing is guidance slip. Now, this is sort of a really hard thing to balance because on one side you have PE ratios, that sort of dictate where the stock price should go. And then on the other side of that, though, you have the cost of money, which justifies the PE ratio. If these guys are not going to be having big earnings misses going into the future, it means that those interest rates are going to come up and those PE ratios are still going to have to compress, okay? You may not actually get the actual earnings compression yet. You may just see more PE ratio compression. Either way, it results in stock prices dropping. But at this point, you're really at a point where PE ratios have compressed and some of the earnings have dropped as far as like what they're hitting or what they're missing. But none of it is overall damning to the economy, right? Where it all has to crash because any of these companies is really dropping the ball. There are some other things, Credit Suisse and Goldman and Morgan Stanley, they're all trying to do stuff to raise capital. And so you've got a lot of companies jockeying here, really kind of moving into like defensive modes as far as how they're going to go through the upcoming recession. You may be one of the people who thinks we're in a recession. I genuinely don't care what you call it. You have 2 negative GDP quarters. Call that a recession, whatever. It doesn't change anything, right? It just says you have 2 negative GDP quarters and probably going to get a third one. So, like I said, call it a recession, so what? Like, that's just a word to define that thing, right? So, and at the same time, by the way, you're really not seeing the rise up in unemployment. Speaking of unemployment, we do have Microsoft who has set to lay off another 1,000 employees. I know some people who work over there. 1,000 employee layoff for Microsoft is typically pretty much daily business. It's not, the only reason anybody cares now is because of the R word, right? So, they're not really shutting down any major departments. They're not losing major revenue sources. There's not stuff going on. It's just they're trimming the fat, and this is normal garden variety running of the way they run the show or run a business. And it's how you would run a business. Believe it or not, you get employees, they're doing a job, you're not making any money off of those employees doing that job, then you get rid of the job, right? Which means you get rid of the employees, or you find a different job. So really not the end of the world there. And so again, as far as like kind of the market outlook, there's a couple of things that are very interesting with this in the grand thesis. And again, I like to offer three. I think there's three theses on here, and that's the bear thesis, that interest rates will keep going up until something breaks and you get some type of capitulation. That is absolutely the bear thesis. The bull thesis is been that we will get a Fed pivot, we'll get a devaluation in currency, and that will force a boost in stocks. Okay, I get that. I think that the third one is the middle one, and the one that nobody. First of all, it's the one that most people don't think is going to happen, and but as of right now, all of the stuff points to soft landing. Right? You. Sure, you're down in the markets, you're down in the bond market, you're down in stocks, and interest rates are going up. But what you're not seeing at this moment is the layoffs. Now, what invalidates the soft landing is when the layoffs start really ticking up, right? When layoffs, when the job market starts to feel the pain, this is the thing that disproves the soft landing thesis. Unfortunately, it just hasn't happened yet, right? You legitimately have not seen the explosion of unemployment that you would think to have with a recession. So again, all three valid theses that are on the table. The bull thesis is the worst of these. In the point that the Fed does pivot, we go for a currency devaluation. It really, I've heard guys say like, the bull thesis is the end of the world. I don't know if that's entirely true, but I do know that it is not good and makes the least mathematical sense in any direction. So as far as that stuff goes, that's really all I can tell you. Now, as far as like the charts go, I'm going to go ahead and jump in over here to the charts. I have my assistant, my producer, is stepping it up. Give me the daily chart of SPY. Okay, so, yeah, okay. Pardon some of the lines on the screen. So you can see here again, our trend is shifting. Okay, this is something I want you to see, is that you've really gone from this lower low, you have a higher low here, and you've gone up into create. You have a higher low and a higher high at this moment. Okay, now in the overall like grand trend thing, that you haven't taken out like all of this stuff from here. You haven't wiped this off the board, right? So you have a small uptrend. If you're looking or hearing any of the pundits talk about this, what they'll tell you is you're getting a bounce in a downtrend, or that you'll tell you that you're getting a bear market rally. Now, this is the thing that I thought was really, really interesting, and I've thought is really interesting for a long time, is that I've gotten through Steve Van Meter. If you ever check out his channel, check out Steve Van Meter. He does one of the things he's talked about is down here is that Goldman, Morgan Stanley, Numera, and TD Securities, they're all shorting down here, and they're not being quiet about it. Okay. The thing is that there's two things that I think are interesting. Is like, if I know that they're taking, and we're talking like tens of billions, right? Like one of them was like 86 billion short at these levels. The thing is you get any sort of meaningful break above here, and you can see a massive short squeeze in the making, right? Those guys are either idiotic for telling you that they were doing it. First of all, they're idiots for shorting there to begin with. They really should have been taking on their short position way back over here, and they had all of this space in here to load in their shorts, and they had all of those buyers to load into, and now they're just pinning the market down looking for some type of capitulation type event, I will tell you, for Morgan Stanley and especially Goldman, this is foolish. This is foolish, foolish, foolish. It's bad timing. This is as shitty as a Michael Burry trade. And I'll tell you, Michael Burry, smart guy, understands economics, but when he ran in and bought TBT at the top, like right before June, I thought that guy was an idiot. Like, just, you don't look at that chart and do that. But Michael Burry's smart. He's made more money than I have, and, you know, he's been in the game longer than I have, so I guess maybe he does. He can hold through an uptrend or two. He doesn't have to care. Anyway, so as far as other stuff goes, you know, we're on SPY. Again, our trend is shifting up. Our momentum is definitely coming up, right? Our bias is still now closing above the 18-day moving average. I am going to pull that up because I didn't. I'm going to put on the Bollinger Bands. There we go. Okay, so your bias. Okay, so as far as this goes, trend down, or trend is coming up. It's turning right here. Our bias is long. We're above the 18-day moving average, and our momentum is moving in the upward direction. Overall, you got to bounce in a bear market, okay? Does this mean you should really be trying to go long? Absolutely, probably not. If you do start to get it, you've got potential. I can't see this. If you do get the upside, you've got a potential price target up here at 380, basically. So, again, if you do get much meaningful movement above 370, do look out for that short squeeze. Those guys are going to be moving to cover pretty freaking fast. And with earnings season coming in, one of the things that's really saving the market with earnings season is you are getting corporate share buybacks starting to kick up again, especially into the end of the year. And they're a little bit motivated to do that going through a further bear market. So we may be looking at like a significant bounce or some sort of local bottom or some sort of trade bottom is what they might call. It doesn't mean that the low is in. It doesn't mean that the market's not going to crash. It doesn't mean any of that. It just means that for a little while you are going to get some upward buying pressure in the stocks. Now, we could come in tomorrow and have this all completely wiped out and be something different. But as of now, what we're seeing in the market is definitely the movement in the upward trajectory. And the way we're going to back this up, we're going to go backwards here. Normally, we go from the VIX to the dollar to SPY, and we do that on purpose because SPY tends to react to the VIX. SPY tends to react to the dollar. The markets all tend to sort of do that. With Liz Truss coming out of the UK, really kind of, you know, they've clipped her wings, so to speak. With that being said, the UK is pretty much looking to start continuing to do their QT, which means that the pound and the euro are going to start to come back up, right? They're not going to wind up doing a currency devaluation. Now, that's going to put some downward pressure on the dollar because they trade in pairs to each other. So the dollar should come down a bit, and the pound and the euro should come up a bit. Now, long-term macroeconomic picture, I don't really know. I don't know how that's going to be. The other thing that I do know is that China still is. We still don't know whether China is dumping USD to save the yuan or not. There are a couple of things about China that are pretty interesting, and I'm probably going to go over them more deeply in like a different show. But China right now, the CCP, their Communist Party, is having their big meeting. They're talking, and they did put on pause releasing their GDP numbers. Now, overall, this is going to probably mean that you're looking for. This is probably going to mean you're looking for a really, really bad quarter out of China. And if anybody's looking for something that is defined by a word that probably matters, there's a possibility that China goes into some type of depression. Okay, so that could be there. As of right now, what we're seeing, or what we know of what's going on in China, is they've kept their zero COVID policy. Their president's still in office. Their housing market is pretty much just like hours away at this point from collapse, which that'll probably be tomorrow's show where we talk about that. Again, so goes China, so too could go the markets. So the thing is if they go down tomorrow or the next day, it could probably wipe any of this off of the board. So if they're trying to get their short squeeze in, there you go. In the meantime, we're going to go over here. So we still have basically here on the VIX, you've still got your breakout formation, okay? You pull back, you're hitting there at the 18-day moving average. There's still a long bias on the VIX. And remember that like a trend is a trend until the end, right? Or they say a trend is your friend. Or that a trend is a trend until it isn't, basically. David Frost says a trend is your friend until she takes all your stuff and throws it out the window, right? Puts it on the curb. So the thing is again, you're still long biased on the VIX. I would personally, I'm not seeing what I want to see here just yet. I wouldn't be trying to load up VIX calls here. I would wait for this to come. I would wait for this to basically come down, right, through here. Okay, so it's going to come down here, and then turn around and shoot back up into what is pretty standard breakout formation as far as stocks go. In the event that like it doesn't, if you break low before you turn and start going back up in the upward direction, you're looking for it to take out some of these lows down here, some of this, and if it takes out these lows, then your breakout's pretty much failed. And you could still go up, right? You still go back up here and have it reject and come crashing back down. Again, some of the stuff about, especially this chart pattern, is this is the fear index. This goes up basically as people buy puts and sell calls, and the fact that it's patterning out here tells me that it's not irrational fear in the market, right? It's pretty basic hedging that's going on, if there is any, and that's it. Again, if we see a big spike up in there, moves above 35, we've got problems. Okay, again, the dollar really kind of just completely stalled out. You got your pullback, you got your bounce into the Liz Truss sort of thing, and then in here where Liz Truss started to fail, and the European currencies started to look like they weren't going to get devalued, you had this, right? You got this pullback. So not quite almost breakout formation. If this had gotten back up here, you would have had it, but so far you do not. You are in an area where you are finding some support through here, but really not that big a deal. Again, we're going to keep an eye on Europe. How the euro and the pound do is probably going to dictate this. And if you get a nice break in the dollar, it will allow for that nice rally in stocks. Up into a certain point. Again, most of my eyes as far as like seeing any sort of stock market crash or anything, it's going to be, we're going to get the earnings, we're going to get the earnings guidance, and then they come into November, you're going to get FOMC, and FOMC is really going to tell you what you're doing, right? And how the market actually can behave according to things, right? So there is some talk of a 100 basis point rate hike with 6.6 core inflation. That might be possible. They might try and hit it hard. They may not. They may want a little smoother Christmas or whatever like that. But as far as I can tell, again, it is anybody's game. I don't know how the market's going to react to a lot of it. At what point and this is for me, at what point are these rate hikes actually finally priced in? At what point does the market go, okay, the Fed told us that we were going to do, we priced it in, we're not getting hit with something we don't know about or don't understand or something like that? At what point? And that's the thing is going into November is even if they hit you with a 75 basis point rate hike, it is very well possible that the market could rally off of that in that they were told. They told us exactly what they were going to do. So, anyway, so we're going to close this up. I'm going to wrap up with sort of sharing my trade setup right here. And what we're going to do is we're going to go to a 30-minute chart on SPY. And you can come and you see this right here is you've got this channel that's moving up very nicely. It's a pretty nice bull channel, and it's holding well within inside of that very well. And you can see as you get through the day, and you get to this middle part of the trend, and it just kind of hovers around here, okay. And so what this really makes me wonder is what exactly is happening. There's two things that I think are really, really interesting here. One, you get this incredible gap up overnight, right? Just absolutely insane. And the thing is if you really want to cause a massive short squeeze in with the bears, keep that going up, right? And I've actually been stuck with this thought in my head is I can't figure out for the life of me why they stopped. Why if your mission is short squeeze, why would you stop there? And now what the trader guys will say is they brought it back, they filled the gap, and that's really good, right? And so you filled the gap, and which is a sign of a healthy chart. Okay, you came back, you filled the gap, and then you begin to kind of get up, and you started going into this chop fest where the market really doesn't know what it wants to do. So my whole thought process behind this is what are they doing here? Like, it doesn't make any sense to me what is going on with this chop. I really don't get it. The only thing I could think is this whole thing is a big huge options trap, and if it is an options trap, then essentially, how do you trade it? Well, and that's where I went over here and I put on the vertical spread. I'll post this to let me get out of here. I'll post this to Instagram. I'll post this over here to Instagram later today, so you guys can actually see how it's playing out and what I did. This morning, I took profit. I stopped out of my call side, which was green. And when I stopped out of that, because I was up so much, I went ahead and cut the put. Now, if I'd have held the put, I'd have made back some of the premium I lost here, and I would have had an even greener day than I did. But so tomorrow I'm going to be watching for that as I come in to see how it all plays out. So anyway. I'd like to thank you guys all for joining me today. I hope this helps you guys. It helps me out quite a bit. Do me a favor, make sure to hit that like button and hit that subscribe. It really helps the channel out. The Russell Journal is written, edited, and hosted by me, Russell Liss. We are produced by Social Media Shows. Our executive producer is Maria Pureza. And check out Social Media Shows for pretty much all your YouTube channel needs. And till tomorrow, just pretend I said that catchphrase,